What's up, guys? This is Carter Thomas with Coin Mastery TV. I hope you're doing great today. Make sure you hit that subscribe button if you're not subscribed already. Thumbs up if you're ready to rock. And hit that bell so you get notified every time we release new videos. We're doing probably 2-ish, maybe 3 a week until we can really ramp it back up. You got to get that momentum back. Yes. You know what I'm saying? Lighting's kind of weird today. I got here early. Anyway, great to be back. Got some cool stuff to talk about, in my opinion, at least. All the way kind of across the board. I've been thinking about a lot of stuff, been noticing a lot of stuff, both kind of all the way down to the price action on Bitcoin and all the coins to a certain extent, and then zooming all the way out to what I'm looking at and how I'm starting to think about crypto in the bigger picture from a consumer standpoint, which I think is really the name of the game. I think that like governments to a certain extent, but I think really like how consumers perceive crypto and Bitcoin in particular is the most powerful piece of the whole puzzle, right? Narratives, stories, what people believe. And we'll talk about that in a second. So I got some interesting stuff. So before we get into that, on Twitter, if you're not following me on Twitter, you can go to twitter.com/Carter Thomas, join the party. A couple things I've noticed. I obviously have been spending a lot of my time out of the office. I also spend a lot of my time learning and studying and trading markets and instruments other than crypto, specifically futures, a little bit of equities. That's more studying it. Not any options, but things with high leverage, which futures have high leverage on them. Crypto, obviously, some Bitcoin trading here and there, and just like seeing how this whole thing works. And you can see here that I would say probably over the last week or two, a lot of my posts have been about the futures market, about the stock market, things like that. And I think a lot of you probably are like, what are you talking about? And more importantly, like, you probably don't care. So as a marketer, I realized I should be delivering information that's meaningful to you. So I did a little poll yesterday. You should go vote on this poll if you're around, what you want to see in these videos. And over 50% said big picture macro. So what I'm going to do is I'm going to focus a lot more on the macro stuff, less on the technicals and the trading. And then I'm going to do kind of separate videos about things like trading, BitMEX and things like that, because I know a lot of you are like very much against things like BitMEX and leverage, but I've also know that all the pro traders I know and all the guys making a lot of money, that's what they use because it's where the real action is. It's not for everyone. In fact, it's basically gambling. So if you don't know what you're doing, it's not for you. But I'm going to split this up a little bit, and I think it'll help me dial in the content. It'll make your experience better, both as a podcast listener or as a YouTube watcher or wherever you're watching this. And overall, it'll just make everyone's life a lot better. So go check it out. We've got some random stuff on there, but I'll trying to be more active on Twitter more recently or more in the future. Whatever, you know what I'm saying. Okay, let's look at Bitcoin. Okay, so I'm looking at the 30-minute chart on BitMEX, which is very much the same price action wise as anything else. You might look at $20 or $30 differences, but the curves are virtually all the same. You can see a few lines. If you can't see this, if you're listening on the podcast, I have 4 I should say, things on this chart. Right now, I got a red line at the very bottom. That's around 58.80, which was the low, right? It's the yearly low from February, and then the kind of the short-term low from August 13th or so. The other set of lines, I'm going to zoom out here for a second because this is ridiculous. I'm in the 30-minute. These 2 blue lines. Now, these blue lines we've had here for a while, right? I think if I remember correctly, these have been here. One's at 67.90. One's up here at 77.40, so to speak, on BitMEX, when, loosely speaking for the other exchanges. And that represents kind of a bigger zone that's right above and right below high congestion areas, which you can see where there's a lot of chop. That's typically, if you pull up a volume profile, that's where a lot of action happens. And then the third big piece is this green box, which is a new thing. So for anybody who's listening, this green box starts at around 72.50 is the top area, and right at the bottom is right around 69.50. And what you can see is that this lines up on the bottom right with previous resistance points. And you can extend this all the way down. You can see that all the way back to June, and then the most recent resistance. And what happened was that this poked right around on the first initial blast through. This is really where it got stopped out, give or take a few points, had a retracement, and then it pushed right through. This zone is on the short term, which is called a low time frame, LTF. So if you ever see people tweeting LTF, low time frame, that means that it's more of a short term liquidity pool. There's a lot of possibilities that can happen within this green zone. Meaning, if we get through this green zone, and then we get above this blue line, we've got some momentum. I mean, obviously we're not in the clear until we get probably until about 8,500. I mean, clear is a very loose term, but I think that this green box is, in my opinion, going to show us if we are really in an accumulation phase, which means we're going sideways for more, and you can start to really think about, hey, maybe I should start dollar cost averaging, or start dollar cost averaging again, or get serious about it. If we bounce down from this, it's going to show us that there's still a lot of bear sellers, pushing the price down, and then we may have lower prices in the mix. 3,000 may happen, may not. It may just be a capitulation wick where we bounce out of this. It just dumps for 2 days straight, just crazy extreme dumps. And then we start our way back into accumulation. We just kind of get that out of our system. But that's what I'm looking at right here. I am not shorting anything because the trend is going up. At least the short-term trend is going up. I don't like to short the turns. What I like to do is I like to wait for it to start going down, and then if I'm going to short it, I'm going to short it on the way down and kind of get the middle piece of it. So I'm really just using this as a thing to watch and wait for. So for anybody who is thinking about that, that's the way I'm playing it. Again, none of this is professional advice, just showing you what I'm thinking about doing. Now I'm pulling up Ethereum here, especially Ethereum against Bitcoin, because I think that this is a good, representation of the overall altcoin market. The reason is because many ICOs used Ethereum both in their ICOs. Many dApps run on Ethereum, but their treasuries, so an ICO or a coin's treasury, the amount of money that it raised is in Ethereum. So there's a bit of a reflexive property, meaning that as it goes down, it gets to a certain point, and people realize, man, I got to sell, because if it goes down any further, we're actually kind of screwed, which causes it to really dip. I mean, that's true with all markets. But I think Ethereum historically has been a pretty good indicator of how altcoins are doing. And if you ever want to go check out Luke Martin's. He's really good at this on Twitter, Venture Coinist. He's always talked about this. He explains it very, very well. I actually have a podcast that we recorded that I realized yesterday I haven't posted it. So I'm going to post that probably tomorrow. So you can stay tuned for that. But this is a good one to watch, because I think that if you start to see Ethereum moving, you're going to see altcoins move in a much, much bigger way. Versus right now, what you're seeing is Bitcoin moving, and then you're seeing a lot of people that are turning over to altcoins, and they're saying, well, if Bitcoin's moving up, I know altcoins, I'm going to get a much bigger pop because of liquidity, because of the size of the market. You're going to get a bigger bang for your buck. It's going to be a higher risk, higher reward situation. Now, the difference is, in my opinion, when you're in a bull market like we were last year, and you're moving up like this, it's something in Bitcoin, and you go into an altcoin. One, there's a bit of a divergence because of the dominance, which is what we saw happen multiple times last year. Bitcoin goes up, the price of altcoins in Satoshi terms goes down. Now we're seeing kind of in parallel, that to me indicates that all these altcoin spikes are people that are just trying to turn profits so they can go back and buy more Bitcoin with it, right? These are not people that are looking at like Cardano, for example. I didn't buy any Cardano. I'm just saying they're looking at it. They're not saying like, oh, this is going to change the world. This is going to do everything. Many people still believe that about any coin on here, but it's not the widespread narrative from what I can tell. My personal experience is people are looking at this and they're thinking, which one's going to pop the most that I can buy, sell, and flip, get back to Bitcoin, start to rebuild my stack so that, you kind of recoup your gains that you've lost. It's a natural psychological result after you experience a big drawdown. Your first inclination is, how do I get back up to where I was before this drawdown, right? That's a trick. That's like a mental thing you got to work with in trading. So that's what I'm seeing. Again, I'm not going to get too deep into this because we're going to stick to a little bit more of the bigger picture stuff. I think that'll be more helpful for you guys. But that's where we're at right now. I'm really just watching this zone. Okay. Now, the other thing that I've been really looking at, which many of you guys have noticed on my Twitter feed, is the stock market, the U.S. stock market. Now, I'm looking at the S&P 500, ticker is SPX. That's kind of the tracker for the S&P 500, so to speak, similar to like an index. And you can see that this thing, I'm going to go to the 4-hour. You can see that we have had an incredible run recently. We had a pullback early January, and now we're at all-time highs. And we continue to have all-time highs almost in an accelerating fashion. And there's lots of issues with this chart overall. If you really dig in, there's gaps all over the place on the Russell 2000 chart. All of them have problems, NASDAQ included. And the big inclination is to think like, oh my God, this is way overheated. Look at these valuations on these companies. It's the longest bull run ever. And I think that logically that makes sense. If you looked at the United States as an insular economy, if you looked at it as a one thing, everything about that logic would be right. And it would be probably a lot of sell signals, yield inverting, the whole thing, everyone's talking about. The thing is, this isn't just the United States. This is a global economy now. And so people in other countries can now, will invest into this stock market. And I'm not talking about people that have eToro accounts over in the United Kingdom. I'm talking about sovereign debt, like governments that have huge endowments, like hundreds of billions of dollars. And if their country their currency is losing money, or if their stock market is going down, or if they're losing faith in their government, aka they're not buying bonds in their government, which is happening in countries, they're going to park their money somewhere where it's safe, and two, it's going to potentially get some yield. And while I don't necessarily think that this is healthy, that the U.S. that this S&P 500 and the NASDAQ is, it makes any sense in certain ways. But what I do think is that it's like a better option than everything else, if that makes sense. And that's kind of the theme. If there's nothing else, if you want to wrap your head around what's going on in the geo-economic world, at least from what I can tell, my opinion, is that it's not that anything is better. It's not that the U.S. is good or Canada is good or whatever. It's all relative. It's which has a better chance of lasting or surviving than others. And in my opinion, in the next 5 to 10 years, I think the U.S. probably has the best shot. And then eventually the U.S. is going to have a huge currency, debt, everything. And then, countries like China and whatever else will have there'll be a shift back over to the East, right? Like Asia will have a major resurgence of power. But in the meantime, that's the way it works. Now, why is that important to you? Why do you care? We're talking about this when it's a crypto channel. One, I do think it's important because as Bitcoin gets bigger, decisions need to be made about where capital gets allocated. And if the more you think like this about, well, where's the money going to go, the more you can start to make really informed decisions about your portfolio that you're in cryptocurrency, about the discussions you have with people, your own confidence and conviction, like the narrative that you believe, which makes a huge difference in the long-term success of something like Bitcoin. So I think that's one big piece of it all. I think the other big piece is that as the S&P 500 continues to go up, there's going to be more and more kind of cash that's looking to go somewhere. And that may translate into this price going up. It may not, but we are at a point where I believe we are going to start to see like Bitcoin is getting big enough. It's getting enough pressure from these other markets, these uncorrelated assets, quote unquote, that you may start to see some of that money move over into cryptocurrency. We haven't really seen it yet, but like people coming out and saying, hey, we're doing this. But I do know for anecdotally and just I got a suspicion that is starting to happen because there's so much cash that's available for people around the world right now. Like everyone's just sitting on money being like, I'm just going to wait for the dip. I'm just going to wait for it. And then I'm going to buy in. In every market, it seems like it's overvalued. So everybody's kind of like, well, I'm just going to sit on some cash and wait for it. Whenever that happens, things go higher because like that's just how it goes. And then people are like, well, now I can't miss it. And they put it in, get the blow off top. So Bitcoin may be in many ways more attractive to people as the confidence builds, as the prices go up here as like a hedge. So something to keep in mind. I pull up the DXY. I think if you're going to study anything in the global economy, if there's one thing to know, it's how is the U.S. dollar doing? And I think that the U.S. dollar, you can see these levels I've drawn. These are just based on expansion coming out of the chart here because the DXY only goes offline for like about an hour a day. So there's not really any gaps the way there are, right? You get, like you see these gaps. This is because the stock market closes between 4 o'clock p.m. Eastern to 9:30 a.m. It's shut down. That's why you can get a gap because there's a futures market that reprices it in the meantime. You don't really get that in the DXY, but you do get, if it does happen, you get huge blowouts in price, which tend to get worked out. And you could see that there's the possibility, completely technically speaking, that the U.S. dollar can go all the way down to 91. However, if that happens, which I don't know if it will go down that far, after that does happen, I think, it's going to bounce up. And I mean, we're talking like 115, 120, which is basically going to collapse the entire global economy. So it's going to be bounce, and then it's going to probably go completely nuts until there's some sort of government intervention, like the Plaza Accord, right? This all together, right? Take this whole thing. The biggest thing to take away, other than like where the cash is flowing and comparing the things together, everything could change in an instant if something happens. If a president gets indicted, if a war breaks out, if a huge natural disaster hits, if anything crazy goes down, all of this could change. And it probably will in one way or another. But from as it stands right now, that's the way I'm looking at that. And it all feeds into this tiny little asset class called cryptocurrency, which is predominantly driven by Bitcoin right now. How this is going to fit into this bigger world. And that is the question that we want to solve. Or that's the question that we always are trying to ask ourselves. One thing that I thought was really interesting is I would say probably, maybe once a day, every other day, I open up Cointelegraph sometimes and to just see what people are talking about. What do the headlines look like? What are some of the articles? people were talking about. And one of the things I've really noticed is the amount of public money, publicly traded money, I should say, or existing businesses that are starting to merge into this crypto blockchain world. And that is really the headline that you're starting to see over and over. Whereas 6 months ago it was about the coins and development and the market itself and the price action. Now you're starting to see companies, like people trying to implement and test and see if they can make something click, right? What's going to work. And one of them that I thought was really interesting is what Huobi's doing. Now, this is not like a thing for Huobi or anything, so I don't, please don't take it that way. But they're basically doing a reverse merger, right? Like, I think it's not an inversion, but it's like like this happens a lot with Chinese companies where they will basically buy a U.S. company, overtake it so they can get listed on a U.S. stock exchange without actually going through the SEC process of like a Reg D and the whole formalized process. They can just buy a U.S. company. Huobi is doing something similar, right? It's not exactly the same, but the idea is similar from a corporate law standpoint. And if this is true, then all of a sudden you get P&L, profit and loss statements that can be audited and potentially even traded on public markets. This is the sort of stuff that legitimizes blockchain and cryptocurrency as being a profitable and productive enterprise. I talked about this, I don't know when, a while ago, but I gave a presentation about this a couple months ago about the next big bubble is going to be driven when you start to see companies, either non-blockchain companies that implement blockchain or blockchain-based companies that become real companies, like public companies, who like somebody starts to produce profits that are unexplained and disproportionate to the existing competitors. And that is going to lead to excessive valuations. Excessive valuations are the hallmark of bubbles. Bubbles are when people make enormous amounts of money, lose enormous amounts of money very, very quickly. This is the beginning of the next bubble, okay? I know we've mentioned this, but I can't stress this enough. Look at the headlines. It's happening right in front of us. It's all about companies. It's all about existing profit centers, places that have employees and money and investors and sometimes shareholders looking for ways to be more productive, looking for ways to make more money, to save more money, to increase their bottom line, increase their profit margins, lower their bottom line, so that they can that adds new value, new growth. That's how economies expand. Not just the stock market. That's just how more value and productivity and GDP is added to the world. And through that, you will see huge increases in value. Some of them may be some of these tokens. I don't know how many. I think some of these definitely will be, right? Like when you look at some of these tokens and you ask yourself, which one of these are companies? Those are probably the ones where the token represents an equity or some sort of equity stake. Like Binance is a good example of that. When you look at some of the coins, when you're like, oh, this is a platform, it's very difficult for that token to go 100x or 10x even, because it's hard for any system to be built on a volatile asset, which I'll talk about in a second here. Whereas I think another huge place to keep in mind is back here in the stock market, whether it be the Canadian stock market, the TSX, whether it be in the S&P 500, whether it be over in the DAX over in Europe and in Germany and Italy, or, Italy, so to speak, but like Asia, everywhere, Japan, you're going to see companies that start to produce massive bubbles or massive valuations. Right, we're seeing like cannabis is kind of happening right now. If you guys don't know, if you go into the cannabis market, there's only, I think, like 3 major ones. Like there's probably a bunch of other smaller ones listed on the New York Stock Exchange and NASDAQ. There's a bunch on the Canadian stock exchanges. You can buy a lot OTC, but it's all starting to go parabolic, right? In the last 2 weeks, it's totally going nuts because people look at cannabis and they're thinking to themselves, this is going to be huge. I mean, it already is big, but it's going to be so big. And some of these companies are starting to show some profits, but their valuations are like astronomical because there's a lot of money that's looking for a place to go and they're looking for potential rewards. Same thing is going to happen with blockchain. That is how it's going to go down. And look, it's happening right in front of us. It's just not like this is like the beginning of it happening. And then one day, like one of these companies is going to come out and say, we used XYZ blockchain and we made we doubled our profits. And all of a sudden the money is going to start to get very, very interested in what this whole crypto thing is all about. All right. So I think that is why it connects to this. One of the videos I'm going to do maybe this week, maybe I'll do it won't be like a coin match video. It'll be kind of like a separate tutorial video, is just overviewing all the different markets and instruments that you can potentially trade. Because I will completely self-admit, and many of you who have been watching this will agree with me, last fall, I was like, I'm never going to, I don't short coin. I don't short anything. I don't use margin. That's crazy. You know, buy the dips, dollar cost average, buy index funds. That's the way to do it. And honestly, I would say for most people, that's probably true. People who have, especially if you have a job, you have a full-time job, you don't want to be a trader. That's great. I was kidding myself though, because in reality, I was just like, actually, I just don't want to admit that I don't know how to do that. I don't know what the tools are. I don't know how to go get set up with Forex or trade futures. I have no idea what to do. I don't know how it works. I don't know where to start. And so I think that's just knowing what's available is the beginning, so that as this stuff starts to happen and you see it trickle into new markets that are tradable, you don't see guys like me posting being like, oh my God, the the S&P 500, which is the ES futures or the NASDAQ futures, are crushing it, and like watching these huge amounts of money coming in from leveraged futures accounts, because and hating on it because you're like, oh, I don't know what the hell he's talking about, and I don't want to know. So anyway, that's just my experience. I know that took me a little while to kind of wrap my head around and be like, you know what, I should probably just learn what the hell's going on. So I'll do that at some point, because I think it is helpful. I think that it's going to be very important as these markets progress. Now, the last thing I want to talk about, this is kind of not philosophical. This is just kind of a thought I want to share around the idea of Bitcoin. As all this happens, right? It's first of all, it's easy for me to sit here and pontificate about like what's going to happen with the stock market and the currency markets. At the end of the day, it's like no one really knows, and the market's going to do what it does. One thing I do know though is that as I start to think about where this is all heading, I am very confident that the currency market is going to eventually lead to most developed countries and many emerging markets realizing that central banking is a pretty bad idea. In fact, it's like a terrible Ponzi scheme, and it's created insane amounts of debt, insane amounts of inflation. It's really just been a horrible experiment that's led to like an unsustainable model that is going to really be a big problem. And as we go towards that, it makes you really start to think about, okay, well, what would happen if we got into a currency crisis globally? Now, as an American citizen, I think about my country and what would happen to me in the U.S. dollars. And you can take it as far as you want, but if you do go down that rabbit hole and you start to think like, man, I could wake up and like, I can't imagine being in Turkey or Venezuela or Zimbabwe or Brazil or any of these countries, South Africa, and being like, my currency's worth 30%, or I can't go to the bank, or my credit cards don't work, or something. It's like, that is insane to think about, but it's happening right now to people. And it's, it's easy to think like, oh, well, that could never happen to us, but it could. Like, it could very easily happen. And that, I think, is what is so attractive about Bitcoin and some cryptos to a certain extent, like especially the proof of work cryptos that are built on deep decentralization and owning your own coins. And the more I get into this macro stuff, the global side of it, and the more I see it, the more I think about the bigger picture and where we're heading, and the nature of money and what that really means to own your money, to have control of your money, short of like having a bar of gold, which at the end of the day, it's not, you can't walk into a store and say, oh, here's my gold coin. Like, there's not a whole lot. You can't really barter that well with it. But that's something you can actually, like, you can hold on to. Like, you can't really get that seized digitally. Whereas something like Bitcoin, you can own a lot of that. I know this is nothing new, but it's good to revisit this idea, because instead of it being this kind of fantastic libertarian dream, all of a sudden it starts to become a reality. It is a reality for people right now, and it can continue to be a reality for people as a form of protection, as a form of security, but even beyond investing, just like, like basic, making sure you're all set. And that brings me to this final idea. I've got a picture of a few S curves. I pull up this because this is like the closest I could pick to an S curve. Nothing specific about this article. I haven't even read the article. But if you're listening on the podcast, it's basically 3 S curves. One that is more of it goes up faster up front. One that's a very even S curve on the bottom. One that is steeper in the middle, and then it kind of blows up at the end. Meaning the top is front loaded, the bottom is back loaded, the middle is a traditional S curve. When we look at Bitcoin, I think right now we're thinking about it like, most people, I would say, are thinking about this like an investment. They're thinking about, how does the price of Bitcoin or any coin that you have go up? You're looking at it as I'm going to buy it low. I want to hold it for a long time, potentially for a very, very long time. But at some point, I want it to be worth a lot, or I want to sell it for a lot of money, a lot of fiat, I should say, or another coin. And so we're thinking about this ascension of the price. Now, the problem with that is that nothing ever goes straight up. As we know, everything is cyclical in markets, and I would argue in life. But for every time it goes up, you're going to see it come back down. It's going to go up, and it's going to come back down. It's going to go up. And then eventually it's going to stabilize. And if you ever want to see what this looks like, you can look at something like, let's see if GLD has, I don't know if this is going to be enough data, but let me see gold price here. So you can kind of see with gold. I mean, we've compared Bitcoin to gold before. This doesn't really go back to the 70s, which is what you really want to happen. But anyway, it goes up, and then eventually it starts to even out. At least it has. And there's different schools of thought on why this happens, but mostly because of things like futures and derivatives, options, that the price just gets more of a supply and the demand. But with something like crypto, where there's mostly a fixed supply, short of coins being lost, theoretically, this curve could be much flatter if there was a true market for it. Hopefully at some point, right? Because all the volatility would get absorbed by the futures market and the options market, and it wouldn't actually go to the spot price. And that, in some people may think to themselves, oh, well, that sounds terrible. I want Bitcoin to go to $1 million. But if you think about it, like your entire bank or like a lot of your money would be in Bitcoin, at some point you might realize, I actually want it to be stable because I want to know that it's not going to go down, right? I don't want it to be a volatile asset anymore. And I'm willing to give up the upside so that I can control my own money and not have to worry that it's going up and down 10% every single day, right? And then you can go and trade something else if you want to go trading. But I think that, like selfishly, Obviously, I want to trade it. I'm going to do all that. But I'm really starting to think, man, having something that's stable, probably not tether for anytime soon. But there, there's stable coins that are attempting to do this. Maker with DAI, Trust Token, and we've all seen them, but none of them are like totally full out legit. None of them are fully decentralized the way Bitcoin is. This makes me very interested and excited, and this makes me want to own Bitcoin more than ever. I'm not going out and buying a ton of it because price still is king on this asset class. But at some point, I do want to have a ton of this stuff because I do want to be able to control it, because I do know that the world is headed in a direction where you are going to want to have control over as much as you can, at least in my opinion. Contrary to what most people will do, which is hand over their keys and passwords to any online company that asks for it. I would prefer to own it. And the only way to really make that a reality is you got to have the price pretty stable. And then let the price action move over to whether it be other coins, whether it be other trading instruments, vehicles, stocks, options, whatever. But that's just something that it's gotten me reinvigorated about the decentralization side of it. But it's a chicken and egg thing. I'm not going to go out and tell everyone to go buy it because we're not even close to here yet. I mean, we're like at the beginning phases of all of this. And I think a lot of people would disagree with me on what they want Bitcoin to be. They may want it to just be a long-term asset that just the price, like the price is baked into the actual asset itself. It's not baked into the auxiliary markets. And we use something else as a stable coin, which may end up being government issued fiat, which in my opinion, like that's no better than than what we've got right now. It's actually probably worse because they can track everything you do. So something to think about. Is Bitcoin better as an ongoing increase in value asset, or is it better if it eventually stabilizes so that you can actually put a lot of wealth in your own pocket without having to worry about it going up and down all the time? I don't think either one is better or worse. It's just different and something to think about. All right. Well, with that, guys, I think we're going to rock and roll, get back out there, see if we can check out these markets. I think that's it for the day. Thanks so much. If you haven't, hit the thumbs up button. Just make sure you subscribe. Send it to a friend, whatever. And come on Twitter. Say hello. We'll get the conversation going. All right, guys. I will see you tomorrow. All right, or whenever. Peace.